There are a number of important years that we interact with throughout our lives. The most common one is the calendar year, which as we know runs January through to December. Another one is the academic year, which runs September to August. And in today's video, I'm going to talk about the tax year. The UK tax year runs from the 6th of April to the following 5th of April. I'm filming this video in January 2024. As such, I'm currently in the 23-24 tax year. This tax year started on the 6th of April 2023 and will end on the 5th of April 2024. Many other countries, including the US and Germany, keep things pretty simple and make the tax year follow the calendar year, January to December. But not the UK, it's another one of our quirks. So the tax year runs 6th of April to the following 5th of April, but why is the tax year important? Well, perhaps the most important reason is that most tax allowances and reliefs run from April to April and often can't be carried over, so if you don't use them, you lose them. Let's take each one of these in turn. Allowances either offer lower tax rates or reductions to your tax liability by allowing you to earn a certain amount of money before paying tax. For example, most people are allowed to receive a certain amount of income in a tax year before having to pay income tax. This is known as your personal allowance. In the 2023-24 tax year, the basic personal allowance is £12,570. The personal allowance is the same for everyone, but it is reduced if you earn more than £100,000. Another couple of examples of allowances include the personal savings allowance and the dividend allowance. The personal savings allowance lets you generate a certain amount of income from interest on your savings each year without having to pay tax on it. The level of allowance differs depending on whether you are a basic or high rate taxpayer, but any savings interest that falls within this allowance experiences a 0% tax rate, meaning no tax is paid on it. The dividend allowance works in a very similar way, but relates to dividend income. The dividend allowance is the same for everyone, regardless of what type of taxpayer you are, and like the personal savings allowance, any dividend income that falls within the dividend allowance experiences a 0% tax rate. Another excellent example of an allowance is the individual savings account allowance, or ISA allowance for short. You can put up to £20,000 into an ISA in a tax year, effectively allowing you to shelter £20,000 of your cash or investments from taxation. But any unused ISA allowance cannot be carried forward into the next tax year. It is use it or lose it. Tax relief works slightly differently and is something you can claim to reduce your overall tax bill. Tax reliefs are government incentives to encourage certain types of investing and gifting. Tax relief allows you to deduct some of your payments you make during the tax year from your gross income, so there's less for you to be taxed on. You can claim tax reliefs in addition to any personal tax allowances that you're entitled to, which essentially means you'll take home more of your income and pay less tax. Perhaps the most well-known tax relief is pension tax relief. When you pay into your pension, some of the money that would have gone to the government as tax goes towards your pension instead. This can help reduce the amount of tax you pay and be used to help to boost your savings for the future. This tax relief is given based on the rate of income tax that you pay. So, understanding the tax year and the allowances and reliefs available to you within each tax year can have a significant impact on your tax efficiency and can really boost your personal finances. In summary, the 6th of April each year signals the start of the new tax year and the point at which your new allowances reset and kick in. Whereas the 5th of April each year signals the end of the tax year and is a really important date if you want to take full advantage of certain tax allowances and tax reliefs you're entitled to before it's too late.